Hello and welcome to Personable, a podcast focused on speaking to the world's best, enabling you to become the best that you can be. Today it's episode 2 of Personable Markets, in which every week I aim to speak to a hedge fund manager, VC or investment banker. As you may or may not be able to tell already, this week we do not have a hedge fund manager, VC or investment banker for the week. In fact, the hedge fund manager pulled out last minute due to something with her dog. So fortunately, I've got my roommate and a good friend of mine who's going to fill in on the podcast instead. And we actually spent a lot of time in the last few days going on and speaking about the market, so he's well informed. So Luke Sloman is a third-year business and management student at the University of Exeter, currently spending his year abroad at the University of Sydney. He grew up in Tokyo until the age of 13 before moving to the UK for boarding school. His academic interests focus on finance-related modules, which complement his broader studies in business and management. Thank you very much for coming on today, Luke. I wanted to get started by asking you what's going on in the news at the moment.
First of all, thank you for having me, Harvey. It's a pleasure to be here. I'd say the biggest thing going on right now is the elections across Europe and Japan. So that if you look at France, there's big implications on what that could bring if there's if they face a new prime minister. Same as Japan. If a looser fiscal prime minister is elected in Japan, it could have global implications, especially with the Fed cuts. There's been a lot of news in the UK with the resignation of
Deputy Prime Minister.
As well as the autumn budget being announced for the 26th of November, which will be very interesting to have a look at, considering what happened to the last autumn budget and the reaction with that and the fallout from it. There's the potential interest rate cuts that are widely expected in the US at the end of this month. And especially with the pressure that Trump's put on the Fed to decrease these interest rates greatly, it will be very interesting to see how far they do that and whether it will be the expected 0.25% cut or if they take a risk and go greater than that.
Just to put in there, so starting off with Japan, the Japanese Prime Minister resigned yesterday, I believe. And we were talking about this last night, that there's kind of been a recurring thing in which the Japanese Prime Minister has been resigning in order to kind of save face for the rest of his party, to make sure that they, keep their majority for the betterment of the party. Why do you think we've seen this trend with Japanese Prime Ministers over the last few years of them resigning for their party? Because if I was to look more to the UK or to the US, for example, a lot of other people would probably put themselves first and their role and that power-centric focus of, I'm the Prime Minister, I'm the President, that's the most important thing. But the Japanese way has been, I'm going to put the betterment of my party first before me. Like, why have we seen them resigning? Why do they have those specific moral duties? And can you explain a bit of a backdrop around that?
Yeah, of course. So the Japanese political system is quite different to the US and the UK, where it's predominantly since post-World War II, there's been one party in power, which is the Liberal Democratic Party. So for the last 70 years, bar a 4 or 5 year period in the 70s and 80s, it's been them in power. So as the biggest party, they will be expected to win most elections, and the main reason why our most recent Prime Minister resigned, Mr. Ishiba, was because he lost both the lower and upper house majority in Parliament. But one of the reasons why I think that Japanese Prime Ministers resign more often compared to the UK and US counterparts is that, first of all, unlike the US, there's no term limits. In the US, obviously, the presidents can only run presidency for 4 years or 8 years if they're successful in their re-election campaign. But prime ministers can run for as long as possible, just as the UK. But I think in the last few prime ministers, especially, there's been a lot of scandals and that have forced resignations, not for the better of them, where the party would have eventually kicked them out anyway, or tried to kick them out. And for Mr. Ishiba himself, after he lost the majority in Parliament a couple of months ago, there was a great pressure on him and loads of calls for him to resign. And while at the moment initially he said he would not resign until the talks with Trump about tariffs would ease away. Now that they have in the last week, and Japan have negotiated a deal to try to ease the pain of the tariffs, he has fundamentally resigned, and yeah, this could cause a lot of this has global implications considering who the next prime ministers could be. If it's there's been names, obviously it's only been a day, but there's been names such as Sane Takaichi, who's criticized interest rate hikes, and he could be more looser with fiscal and monetary policy, which will have a global implication, not just in Japan.
Sorry, what was the exact reason you thought that he might resign?
The most recent one, Prime Minister. Yeah, so he resigned as a result of losing the majority in Parliament, in both the upper and lower house of government.
So I was just looking at the Japanese, the Nikkei 225, if I'm saying that correctly, and that's gone up more than 20% over the past year, 17% the past 6 months, and it looks very correlated, both the Nikkei 225 and the S&P 500, both in terms of the impacts of Liberation Day in April of earlier this year when Trump initially announced the tariffs. What do you think the sort of relationship will be of Japan and the US and Japan and the rest of the world moving forward? Because a lot of countries saw the economic sanctions by the US on the rest of the world, which made them wake up and go, hey, we're too dependent on business with the US. We've got to focus on business with other countries elsewhere. One of the main beneficiaries of that has been China. Do you see Japan wanting to form a close relationship with the likes of China? Do you think there's any thought internally about we need to get less dependent on the US, stronger within themselves? Because even just look at the numbers, they're highly correlated with the S&P 500. Do you think that's not a worry? Like, what is it like living and growing up in Japan in terms of the view with the rest of the West?
Well, I'd say, of course, over the last 12 months last 9 months since Trump's come into power, there's been a lot of concern over tariffs and the economic implications that can have on Japan, and especially the tariffs on Japanese steel and manufacturing goods such as automobiles takes a massive hit, as Japanese automobiles is a very large section of the Japanese economy. However, there have been before Prime Minister Ishiba did resign, he was able to have successful talks with Trump and ease the extent of the tariffs. Saying that, I believe a lot of Japanese companies will be wary that the next 3.5 years of Trump can bring more uncertainty, and that they may have to look elsewhere, look at other markets to not only just manufacture their products, but to also sell. Whether that be China or not, I doubt, as historically Chinese and Japanese relations haven't been too great politically.
Yeah.
And that could cause trouble when it comes to trade, especially with what's going on in the South China Sea and Taiwan, and there's a lot of uncertainty. But I would not be surprised if there's more trade with other countries and areas such as Europe, or other developing countries like India or Brazil, where Japanese companies can come in and manufacture goods at a cheaper cost, but also sell to a massive demographic, because obviously in India 1.3 billion, Brazil a couple 100 million, massively untapped markets for them.
Yeah, I mean, even just looking at the stock market since year to date, Brazil's up more than 15%, South Africa's up more than about 20%, and the Hong Kong index is up more than 25%. So there is definitely the ability to look elsewhere. I was actually saw something quite interesting the other day, that as a result of the pandemic, where people were wondering, these governments gave, particularly in the UK and the US, the governments were printing an unprecedented amount of capital. I think it's something like, let me see, I've got the number here. The global money supply has risen 145% within the past 15 years, which is more than double the rate of economic expansion. And so when a lot of the money was being given out, both in the UK and in the US, in terms of like, to try and boost the economy, that money went straight into, because of the inflation risk as well, that money went straight into the result of higher prices, which actually just boosted the asset, which appreciated the market cap of companies. So the money didn't actually really go into the pockets of, consumers on the street and, give them a better real value of money, but actually just went directly into asset prices. And so we're kind of getting this mismatch in which companies are being valued incredibly well, when actually the boots on the ground economies aren't doing as well. I actually saw, just kind of as an extension of that, I was looking at Apple just now, and they had a big thing with Google, where Google was previously told by the competition authority that they were basically going to have to potentially sell Google Chrome because they were getting monopolistic. And Google and Apple have a $20 billion a year deal in which Google has made the primary search engine, or Google Chrome has made the primary search engine on Apple devices. But this was a very recurring stream of income for Apple. And so the potential to take away that would have had very bad consequences both for Apple and Google. But the court actually ruled that what they're doing is legal, they're allowed to continue, which is both a major win, both for Apple and Google. But it shows that if that deal was going to be taken away, I think the reason that deal was so important is from the bottom line of Apple. I think there was only 75% of that 20 billion was actually straight profit going down to Apple's bottom line. So it shows that even for these massive tech companies, which make up 10, 20 or even more percent of the S&P 500, driving asset growth, appreciating, making the US economy look so good, a lot of that is actually just in the price of the value of the companies rather than the growth on the bottom line, compared to, I think, the iPhone, which is Apple's primary revenue source, is only expected to increase by about 4% revenue year on year. So going on to that, you've got that mismatch of the appreciation of the value of companies versus the actual revenue in the bottom line. I want to go back to that point on Europe, in which you said the focus on elections, and particularly in the UK, where both you and I are from, and have spent a lot of time there. Over time, there's been, looking at the polls, initially last year, Labour won in a landslide election against the Conservatives, I think in June or July 2024. But now since then, the approval rating of Starmer and of Labour has dropped significantly. And it seems that Reform has become the biggest party in the UK in the polls, even though there's probably 4 years until another election. And a lot of this has been on the basis of migrant problems, as well as the economy on the whole not doing as well. You mentioned the autumn budget, in which people might be facing tax hikes. What do you think, people actually within the UK and within Europe, what do you think are some of the major problems people are facing, and how does this have implications on the markets, both now and moving forward?
Well, I think the last 4 or 5 years have been quite a challenging period economically. In Europe, not just in Europe, but across the world, as a result of numerous different factors, obviously kick-started by COVID, and then the war in Ukraine. All of this has led to a massive increase in prices, especially commodities, and as you saw in the cost of living crisis. So ever since that, Europe's been trying to recover, but we're probably still not at the level of pre-COVID, despite the economy already being higher than that. So I think the implication of that is that a lot of people across Europe and the UK especially are definitely looking at standard of living, and when they look at governments, they're looking at governments that improve their standard of living, which is why the potential tax rises that Labour are suggesting for the autumn budget could prove to be quite unsuccessful, and will especially unpopular to the general public, as we saw with last year's budget, where approval ratings decreased substantially after the budget was announced. And I think as a result of that, I think a lot of people in lots of different countries across Europe are looking at their governments and thinking, maybe now's the time to change. So, as seen in France, there's a massive power struggle going on right now, and it has been going on for the last couple of years, with the amount of prime ministers trying to force through budgets and then having to resign as a result of it. But also in Germany, there's the far right wing political party grew substantially as a result of the significant economic problems. And I think this is also one of the reasons why there's such a anger towards migrants, and especially illegal migrants in Europe currently, because the consensus between from the general population will be that they're taking our jobs, they're taking the healthcare rights and all the benefits of what tax can get you. And whether that be true or not, it's the all that anger is directed towards that. For example, in the UK, I read an article a couple of weeks ago which said around 75% of people, their number one concern is migration, and that is what they will vote for. If they're hypothetically, if there was an election, that is what they would vote for, and whoever had the best policy for that would probably win it, which happens to be which is not Labour currently. And yeah, as a result of that, you're seeing a lot of government changes across Europe.
If you were, there was definitely the case of when the Conservatives were in power and the economy wasn't doing as well, and as a result the rest of the country wasn't doing as well. Struggles with the NHS, people not having much money in their pockets, inflation being at record highs, overall government spending, going back to 2024, and Labour was sort of seen as this way to sort of revolutionise it. But there's definitely a thing to be said about, when you're not the ones actually in power, it's easy to give talk about how everything should be improved. But when you're in power, it's much harder to get stuff done than it is just saying what to do. If we can both talk about the struggles and the impact that the autumn budget might have with increased taxes, them going back on their word, which they previously said in terms of not adding taxes on certain things which they're going to add tax on. But if you were in power, if you were the new Prime Minister of the UK, and you had these resources around you with the current market conditions, what sort of implications do you think you would be making in the autumn budget or otherwise in order to leave more money in the pockets of the people within the UK, a better backdrop within the UK, more focused on the economy, less about migration? What sort of decisions and steps do you think should be made? Particularly, just one last point, which seems to be in the paper every day, is that a millionaire is leaving the UK something like every 11 seconds and going to the likes of Dubai. What sort of things do you think could be done? It's all good for us to give, saying it could be better, but what are some real world applicable things that you think can be done to make it better?
Yeah, so I think the UK government's in quite a tough position right now, to be completely honest. They're projected a £50 billion fiscal shortfall by 2029-30, which is a substantial amount of money. So obviously significant financial measures have to occur. Long-term borrowing costs have surged, with last week the yield on 30-year bonds reaching 5.75%, which is the highest it's been since 1998. Sort of again reflecting investors' concern over the nation's fiscal health. So there has to be some change fiscally. Either tax has to go up or spending has to go down. It's as simple as that. Which is why I think Labour do find themselves in a tough position, because they've promised in their election that they would not raise tax, and especially on certain things, and it looks like they will have to. But I think obviously the way it ended out wasn't great, but with Elon Musk and Donald Trump, when Elon Musk was the head of the I forgot what the actual branch was called, but where he looked at the costs of the government and proposed cost-cutting measures. I think that could also be implemented within the UK. I think in such a bureaucratic environment as the government, there's going to be loads of areas where costs can be cut to help increased the money that can be used to spend on other areas of the country, such as the NHS, which has been in the news so much over the last 5 years. Um, so I think that is definitely one area that Labour can look at, because tax rises will only just decrease the standard of living for a lot of people who are already struggling, um, and especially on commodities like housing, where housing has become such a big issue, not just in the UK, in everywhere, in Australia as well currently. But you're seeing people who are having to live with their parents for longer, and in their 20s, or having to have roommates for longer, and and by increasing tax on that, this will only make the problem worse. So I think there's got to be a mix of some tax raise, because I think that has to be done inevitably with the current financial position that the UK government finds itself, but also cost-cutting measures to free up the deficit.
Yeah, I would actually take a slightly different route, and I actually think it starts. I think it starts with the mindset of the people within the country. So I've spent 19 years of my life, 13 years in Jersey, 5 years in the UK at boarding school, and then another year taking a gap year working or interning in the UK, and now I've spent about 2 years in the US and a couple weeks in Australia. And I definitely would notice, having been in the UK, that the mindset towards entrepreneurship, towards trying things, is very much resistant. Don't risk it. It will be embarrassing. Don't need to try that thing. Focus on the solid, the stable. But in the backdrop of an economy where the majority of my friends aren't being able to find roles, I saw a statistic from a friend of mine called Peter Wood, who runs the Graduate Guide, in which he was saying that of the university graduates, only 60% of people are able to get high-paying jobs in the UK. So it's now that also getting an ordinary job is not the safe thing to happen. Whereas when you're in the US, not only is the economy, it's the biggest and best in the world, and there are lots of jobs available, but in terms of people's attitude towards creating and starting things, it's much more open to the idea of entrepreneurship, which in turn will create jobs. It will boost the economy, make things more efficient. It will mean you'll need less capital for each unit of labour that you will have, leading on to bigger benefits for the overall economy. And I think that's definitely a top-down thing. And I know there are certain tax-free breaks and things that are available to entrepreneurs in the UK, but I don't think these are being sort of advertised in the right way by the UK government. I'm not asking for a control of the media by the UK government, but even just using social media to go and encourage people to start businesses, to be pro-growth, because even in the backdrop of a poor economy, there is still stuff that can be done. Two people that I think have been incredibly good at this is one by the name of Simon Squibb. And Simon Squibb was already a multi-million dollar entrepreneur. And then he basically took to social media 2 or 3 years ago, going up to people and asking them what their dream is. They would say, oh, I want to start a bakery, or, I want to be a filmmaker, or this. And then he'd say, I'll be your first investor. Here's a couple £100, here's £1,000. I'll be your first client. Show me what you can do. And more often than not, all of these people could make amazing cakes, were amazing filmmakers, were, amazing personal trainers. And it was actually this idea that, you can try this, you can do this, you should do it as well. He's now gained, millions and millions of subscribers across platforms, has best-selling books. But I think that major mindset shift within the UK population is something that's needed. Another person that I think has been incredible at this is a guy by the name of Harry Stebbings, who we've talked about before. So 10 years ago, he started his own podcast focused on venture capital, in which 3 times a week he'd speak to someone, either within the VC space from an investing point, or someone working at a company like a big startup, or even a company like Dropbox or Apple, and speak to them about what's going on in the space, not only inspiring more people to get into the space, but now 2 years ago he started his own VC fund with more than $400 million. And at the start of this year, he started something called Project Europe, basically to try and compete with the US and encouraging more builders within Europe to go out and build businesses. Because at the end of the day, if people have a mindset to succeed, that sort of mindset trickles down to everyone, and doesn't necessarily mean it'll be easy or possible for everyone, but I definitely think that if you try, there is more possibility to do so. And just wanted to add on 2 more quick things. One, having both Oxford and Cambridge, which are 2 of the best universities on the entire planet, with this new wave of AI, in which there's only a couple hundred to a couple thousand of highly skilled people on the planet, as shown by Meta being willing to spend hundreds of millions on talent for AI. These people are within the UK. And so if I was coming from a governmental perspective, I would give them subsidies, give them research grants, go to people and say, go and work. You have to hire a minimum 1,000 people, teach them about AI, and trickle this all throughout the UK to be very pro-business. And the last point I'll make is that even before the Labour government, when I was interning at the hedge fund, something I noticed was that a lot of companies were choosing not to list in the London Stock Exchange, but were actually going to the New York Stock Exchange. And so I don't know what these specific details are, but I think the UK has to be more pro-business, has to provide low tax environments for the biggest and best companies in the world. Because what a lot of the UK population don't realise is that, sure, this enormous corporation might not be paying as much tax, but if they don't want to pay tax in the UK, they have the geographical mobility just to go elsewhere. So I think being open about AI, open pro-business from the top to allow more jobs to come in, focusing on the narrative focus with Harry Stebbings and Simon Squibb in encouraging people to start businesses. And so, yeah, I don't know if you have anything to add on that, but I think it's more of a mindset shift which trickles down, which would help the UK economy out quite a lot.
Yeah, no, I agree. I think especially with like people like Simon Squibb, who I think he's really blown up in the last couple of years. I've seen him on my feed. I know you have. I know a lot of people, a lot of my mates have as well, and he's quite inspiring because of he gives people who might not come from the greatest backgrounds or have the money to launch their entrepreneur career, and gives them a chance to succeed with only a very brief introduction. And it's not just the capital that he has, it's the connections he has with famous people within each industry, or prominent figures in each industry, which can really help these young entrepreneurs grow what they want to grow. And I think as you said, it's quite a big difference from the US, where I think the mindset is more entrepreneurial, especially within business people. If you go to university and you compare someone who studies business in the UK and the US, I think that the US person would definitely have more ambition of making their own business instead of joining a company and staying there, working up the corporate ladder. So I definitely agree with your comments there, and the top-down approach that you believe that the UK government should impose.
Yeah, and I think that people like me and you and the people within our peer group and in our generation will be in power in 20 or 30 years' time, and there's this sort of lag between the educational levels of the time and the real world impact on the country. Because even the people that are in power today, they've gone through the educational systems. They might have grown up in a world with a better economy or a worse economy, and so whatever situation they're in will have an impact them on 30 years' time. But the very fact that we're noticing that from a grassroots level that people aren't as entrepreneurial, they're spending way much more time on social media. I think there's something to be said about the spare time that you have in a day and what you do. That when you're bored, what you do has a large impact on who you become. So, when I was growing up, there was a big focus on playing outside and being fit and making friends and doing things. But now, as I look at my 11-year-old sister, it's much more of a focus on, I've got a spare bit of time, let me go on social media, let me consume, let me see more of the narratives that are being focused. And people are losing their originality and their own unique perspectives, and more focusing and listening to the same songs, the same films, consuming from the same brands and doing the same things, which makes people more reliant on countries like the US, which are having such a big cultural influence on the rest of the world. And so I think that with the rise of AI, when that's going to go even more so to people having more dependent focused thinking and less independent thinking, the UK has to embrace its originality of thought and to focus on what can we do specifically for the people in the UK. There is this world-changing trend event happening with AI and with being pro-business and with social media. How can we develop tax systems? How can we develop business grants, subsidies, education, and the narrative from the media in order to encourage people to be the best they possibly can? Something that I think Starmer has done incredibly well has been his focus on international relations, and something that was very, keeping war aside, because that's not really the emphasis of this podcast, but particularly with his deal with Donald Trump, in which he was able to get only a 10% tariff. compared to many of the other countries in the world, it meant much more stability with the UK relationship to the US in terms of what was going on from a tariff level. But in the last few days, a judge ruled that actually that Trump's tariffs were unconstitutional, and saying that it was a presidential overreach, and so this might potentially mean that all of these companies that paid tariffs into the US, it might actually have to be reversed, which would then have, obviously a big implication for the US's already huge debt crisis, and so that would then mean a reversal, for what Starmer had been able to do. What do you think are going to be the implications of the tariffs moving forward, both in terms of whether they're kept and whether they're taken away for the US and the other countries across the world?
I think to begin with, whether there will be a more tariffs going forward or less, or if they get ruled to be illegal and they get taken away, I think the last 9 months have been very uncertain economically. And from an investing point of view, obviously that's not an ideal scenario, and it caused a lot of highs and lows. But so I think if the US as of 24th of August, I believe that the US has collected over $72 billion in tariffs, which is obviously quite a substantial amount of money. And one of the reasons that Trump has imposed these tariffs is to reduce the US Federal Reserve deficit, which is, I think, about $4 trillion. And in that state, yeah, it is working. But I think that, well, as a result of the trade policy, there's in February there was a 50-year high of global trade uncertainty, which a year ago today would be hard to predict, considering how globalized everything's become and how interlocked each markets are. So I think with the tariffs, it's going to be a big decision with what happens if it's ruled to be illegal, and if they have to withdraw, because first of all, he's decreased relations with a lot of countries as a result of putting these tariffs on, and if he's now been forced to remove them and go back to free trade, it's almost all for nothing, and he's left himself in a slightly weaker position politically. That being said, even if the tariffs do continue, his recent tariffs on India, for example, have reduced relations quite substantially, which is, some would say, is quite a poor political move, considering India's almost the opposite of China. And previously, the US presidents have tried to encourage better relation with Indian presidents and Indian economies, and now, especially with last week, the military parade going on in China, you would if India and China go close in relations, it could have a massive consequence on world relations and the order. So I think the tariffs are very important in the future. Whether whether the Supreme Court makes Donald Trump reverse these tariffs or not, we'll have to wait and see. But either way, I think they'll have a massive implication on not just the end of this year, but next year and the rest of Donald Trump's presidency.
You were actually just very eloquently speaking to me in the kitchen just before this podcast about a school project which you were working on with the rise and fall of Credit Suisse, in which you were saying that Credit Suisse were the best investment bank in the world in, I think, 2011, 2012 and 2013.
Yes.
If that's correct. And now, obviously they basically screwed themselves over, not having their private wealth management business. This is all Luke's words, not mine. And then as a result of that, they had to be bought by UBS. And then a similar example is obviously what happened with Silicon Valley Bank a couple of years ago, in which they were very overly indexed on investments, didn't have enough actual money in the bank which depositors could take out, leading to a run on the banks. Everyone's trying to get their money out and they can't. and similarly then the stock price of that company went down and they had to be bought by somewhere else. These are two examples of things, and at the time there was a huge impact on the markets and the subsequent fallout, particularly from an investor point of view, but I don't think the average person would have felt that much of an impact unless they were actually, they had money with one of those banks. Going back to the financial crisis in 2008, we obviously had Lehman Brothers, and that's collapsed. And I think the collapse of 2008 was so much bigger because it affected the everyday person in terms of loans on their houses, to getting money out of the bank, to the stability of their job, to the amount of inflation. And it was being told by every piece of media everywhere and had a subsequent fallout. The US, on the other hand, was getting close to the debt ceiling, which it's had a year ago, and it's continuously having to be raised. And when Donald Trump got into power at the start of this year, he got Elon Musk's, and they started DOGE, the Department of Government Efficiency, in which they were trying to cut out the government debt. And pretty much every day I was hearing about these news stories of these bullshit ways in which the government was spending money on random pieces of things and donations to other countries for plays and performances, and overpaying for certain things and projects that had never been built, when suddenly it basically seems that Elon Musk wants to spend his attention elsewhere. And from an investor standpoint, it seemed like this maybe hadn't been as efficient as it should have been. And even trying to cut out things like the Department of Education, they originally got rid of and then they had to be brought back. And so DOGE wasn't actually able to cut out as much spending as it was originally thought out to be. With this information, the investors are now focusing on other things. The UK gilts are at this, as you mentioned, at its highest in 30 years. We've got China, North Korea, and Russia getting closer together. We've got the Trump tariffs potentially being reversed. We've got the UK Deputy Prime Minister and everything that's going on there. And next week there'll be new news, and the week after there'll be new news. But even with Trump's big, beautiful bill, there is even more debt being added onto the US. How severe of an issue do you think it is for the US's debt to keep accumulating? Because at this point in time, from my perspective, it seems that no one has a solution to this problem that every single person is aware about, and no one wants to be like, this is my fault, because there'll be new presidents, there'll be new prime ministers in the UK as well. Meanwhile, China and countries like Japan are accumulating all this debt, which is giving them more leverage over countries like the US. What should be done by countries like the US, like the UK? And do you think this is as big of a problem as I think it is? Or do you think this is something that people will just sweep under the rug over time as inflation keeps going on and the economies keep growing? It won't seem to matter. Or do you think we're going to have potentially another financial crisis like 2008? Like, where on the scale of severity does something like the US debt fall? What will be done about it? Can it be swept under the rug? Or do you think there will be a judgment day in the end?
Yeah, that's a good question. I think the debt that the US have accumulated over numerous years is getting to the point where it is quite concerning. $4 trillion is a lot of money, right? It's not something that could be paid back tomorrow, for example. So I think it is definitely something that US presidents have to look at.
40 trillion.
So $40 trillion. Yeah. Sorry, 40 trillion. That being said, for US presidents, I can understand why they might not focus on that as too much. As for the day-to-day person, there's not much impact on that debt. If that debt decreased by $10 trillion tomorrow, for example, or halved by $20 trillion, would that increase standard of living in the US by that much? Probably not. So I can understand why US presidents might focus on other areas because in the end of the day, they want to get re-elected. They want their party to succeed. So you have to remind me, what was the second part of your question?
Yeah, I was kind of talking about the severity of the issue and whether you think there will be a judgment day moving forward, or is this something they'll just keep, putting under the rug?
So I think there will be another economic crisis at some point, obviously. The general rule of thumb is that there's one every 15, 20 years. That's sort of the cycle that's been going on for the last 100 years. When especially globally, especially in the last 30, 40 years globally, when more the markets are connected now as a result of globalization, there are global financial crashes, such as you said, 2008, and before that, even like the Asian market crisis in the 90s. So, and if you look at the economic trends of the last couple of years and the numbers, I think we're all at very high borrowings across not just the US, but across a lot of different countries. And some people would almost describe it as a bubble as well with the rise of AI and the amount of money that investors are putting into AI and the valuations have skyrocketed. Um, it can be described almost as a bubble. So will that bubble eventually be popped? I'm not too sure. I'm not an economics expert, um, but especially with the economic uncertainty of the last couple of years and this year, especially with the tariffs, um, I would not be too surprised if there would be if that bubble gets popped within the next year and a half, 2 years.
I think it's a shame that for something like this to happen, there needs to be such devastating consequences. And there is also the focus in which, there's always that focus that there might be something more, that needs more attention earlier on, such as a war, such as an internal issue, but something like the debt that, if it were to happen, would be so much more comparatively severe than the immediate needs of the citizens within the country, because they wouldn't have any money, they wouldn't be able to pay for anything, no one would have any jobs. If this were to happen, the US would be taken away as the primary currency of the world. There would be a strong move away from the US, biggest economy in the world, to potentially getting overtaken by China. So many disastrous consequences. So it'll be interesting what happens there. And I actually don't think it's a case of, we'll see what happens, but there has got to be predictions to be made, because, maybe you've got to do an aversion away from bonds, away from stocks in the US, and look to more countries across the world, not simply for a basis of, where do you get your returns from, but in terms of just purely protecting your capital. And I think I saw something a few years ago in which they were sort of like, you should have 60% asset allocation in stocks and 40% in bonds, and etc. And when they're on the upside, they might be particularly uncorrelated. But when markets go down, there's the whole all boats rise when the tide rises. But there also can be a case of when the tide falls, all the boats fall as well. And so you've got to be careful of, are these things just, are they not correlated on the way up, but are they correlated on the way down? So you've got to be careful of that from a risk perspective. Something I thought was pretty interesting was that Robinhood has joined the S&P 500. They're valued at more than $90 billion, particularly as you've seen the rise of stocks like GameStop, in which a lot of people, and that kind of reached, they got sensationalized, in which lots of retail investors got interested in the markets, with Robinhood kind of being seen as the big name of people investing. What have you kind of noticed in terms of social trends with your friends and the people around you? Obviously, when people hit 18, there's a big rise of gambling within the last few years. But from a stock perspective, is it only certain people with more money that are getting interested in stocks? Is it simply because the markets have moved so much? Like, are your friends getting involved in investing? Like, what has been the trend up to this point, and where do you see that moving going forward?
Yeah, I think just think about my friends. I think, to be honest, a lot of my friends don't have money invested into stocks currently, or funds. I think that's a result of a couple of things. So a lot of people are, they don't actually have that much disposable income to be able to invest in stocks and funds. Although they might, in the long run, they are beneficial. If let's say if you put money in the S&P 500 year on year, you're likely to beat the market, beat the banks. But yeah, just a lot of people don't have enough disposable income, and I think a lot of people don't actually have the knowledge of what to invest in, which is, yeah, I mean, partly down to the person themselves, but also maybe partly down to education. Whether this kind of stuff could be taught more in schools or even university, who knows? I think that there should be some kind of education on investing stocks, and not just those aspects, but also managing finances and just and that area within schools, because when a lot of kids leave, a lot of students leave schools at 18 or even 16, they go into the real world. They might get apprenticeships, they might go to university, might get jobs, and all of a sudden they might be earning an income from going from almost nothing or even nothing to getting £20,000 a year, 30, 40, however it may be. That's a massive difference, and a lot of people just don't know how to manage that. So I think that is something that needs to be taught in schools and alongside stocks, because a lot of people just aren't informed. So I had some friends who actually invested in day trading in gold, and they all lost quite a lot of money, and I think that just comes down to lack of information, and obviously the day trading very volatile, and I think a lot of people might see the benefits, or it's like gambling. A lot of people might see the benefits of it and go, wow, I can get rich really quickly if I just put £200 on gold and sell it when it's £600, or with gambling, like just put £200 on this football team to win and I might double my money. But you don't think about the downsides, which is you can lose all your money or most of your money. So again, I think that comes down to education, and just more knowledge and more information is needed to be shared to young people such as ourselves and people around our age about the benefits and downsides of stocks. Because even investing in the S&P 500, for example, it doesn't always go uphill. If you invested in S&P 500 after Donald Trump got into power and then sold after the tariffs were announced, you have lost about 10%, 15%, right? So it's all about information and acknowledgement of the fact that the money you invest, you might never see again, and you've got to be fine with that.
So I have so many thoughts, and I'll try and link them all together on that topic. I think there's like a Warren Buffett quote, which is basically like the stock market is the mechanism in which money is transferred from the impatient to the patient. And particularly when people are younger, similarly is why insurance companies charge people that are younger more money on their cars. It's because they're more reckless, they're more myopic, and want big term results within the short term. And the number of people per 1,000 people that might make money would be 1 and 2. Whereas the number of people that lose money might be 998. Even on the websites, it's like the cigarette packets that say, if you smoke this, you'll probably die, and people still take the risk to smoke and think, oh, maybe I won't die from it, even though they're suffering as a consequence. And when you go on these sites, such as on Robinhood or eToro, it says 95% of traders will lose money. But because people see stocks like Palantir going up 1,000% or Apple going up hundreds of percents over the years, people are like, oh, I can make a lot of money fast. I actually have seen a different perspective. The US to the UK, similarly, in which many of my friends in the UK aren't investing. And maybe that ties more into that same message we were talking about earlier in the podcast, in which people need a mindset shift to think about growing their money, growing their wealth, merely instead of money just being a fixed thing, which it's not. Whereas more of my American friends have been investing in the stock market, on Robinhood, into things like gold and Bitcoin, which I'll talk about in a little bit. But one of the big problems is this focus on investing is getting very confused with the idea of trading. So investing, from my perspective, it's often associated with like longer term holding, through the ups and the downs, just like you said, investing in the S&P 500, in which when you invest in something, it's going to last for a number of years, and you're going to hold on to it and see where it is in a year or 2 years or 5 years or 10 years versus a couple days, weeks or months. But on that, it's meaning that with 95% of people losing money, it basically might as well be likened to going on Flutter, FanDuel in the US, or Paddy Power in the UK, in which you're just gambling away your money. And so the true winners of these are actually quantitative hedge funds. And this was a thing when I was talking to you about this as well the other day, and I just mentioned it, the idea of GameStop, in which GameStop was sort of seen as these people on Reddit went to this company GameStop, which was basically a big company 20 or 30 years ago and has basically suffered as a result of the likes of Netflix, in which I'm pretty sure you would go in and buy physical films, right? Is that correct? Physical films and stuff?
I think so, yeah.
But obviously now with the digitization, the use of the iPhone, the MacBook, you can just get all of your stuff on streaming. But basically a group of retail investors realized the short interest. So short interest is basically, if you look at the market cap of a company, so the number of shares times the value of each number of share, it's the amount of people betting against the company, shorting it relative to the total market cap. And I think the short interest got up to about 40%. So that's saying for every $100 of value in the company, there's $40 betting against the company. And shorting is essentially where you borrow a stock from someone else, you sell it off at a price, and if it goes down to the lower price, you buy it back and sell it. So if you had a stock for $10, and then you would borrow that, sell it for $10, and then you have to buy it back in, say, 90 days when it's down to $8, and then you made $2 profit. And what these retail investors realized was that if the short interest is at 40% and all these hedge funds with huge amounts of money are betting against GameStop, if we can all band together and essentially get a group of us to buy and move the stock price up, because shorting, you're borrowing stocks, there's a certain cap at which these stocks have to be bought back. So if they got a certain amount of retail investors to go ahead, buy back the stock, it would force the stock price up, meaning the hedge funds would have to exit out of their trades, and then they would then have to buy back the stock as well, pushing the stock higher. And there was this big narrative by the media that retail investors were taking down hedge funds, particularly this hedge fund, Melvin Capital, I think lost something like $3 billion. And so there was this big fight between the everyday investor and the big Titan hedge funds. And then I think Ken Griffin of Citadel bailed Melvin Capital out, gave him a couple billion, enabled him to buy back his short and, overcome the retail investors. But what this painted by the media was two things. One, in that the retail investors are people that actually need to be taken seriously. Prior it was seen as they have limited amounts of capital. But nowadays, despite legal lawsuits, people still are able to communicate about stocks on social media. So, groups like Wall Street, I think it's like Wall Street, whatever it is, on Reddit, there's a group on Reddit, are able to still band together and buy stocks. But there was also this focus from the media that the retail investors are actually the bad guys. But actually, if you went into more detail on what happened with GameStop, and I'm not painting them as the bad guy at all, but just more for informing the viewers, what happened is Citadel Securities pay Robinhood more than $1 billion a year to get access to trading information, and so do tons of the other quantitative hedge funds. So when you're making a bet on your phone, I want to buy or sell this company, this data is actually being sold to quantitative hedge funds. And so the people that you're against in the market who can wipe you out can quite literally form algorithms against you. It's like playing chess and the other team knows exactly what moves you're making. And it's exactly why a lot of hedge funds don't disclose the moves they're making. So yeah, that would kind of be my perspective, that more focus on the US than the UK in terms of investing. It's still very much likened to gambling. The house always wins. Who is the house in this case? It's the quantitative hedge funds. They are quite literally paying people like Robinhood for access to their trading information. And yeah, I'm very keen to see what happens moving forward, whether they put a ban on quantitative hedge funds, being able to access the information, whether people have a focus on investing more for the long term, whether there'll be more market participants from retail investors getting involved, or there will be a transition away from the stock market entirely. I want to go on to two more quick topics on the basis of investing, one of which you mentioned is gold prices, which I think reached a record high of $3,578.50 an ounce. They might even be even higher than that, which is up more than 40% since the start of the year. Alongside that, Bitcoin, which I think has 10x'd within the last 3 or 4 years. What do you think have been the main impacts of gold reaching such heights? Do you think that this trend will continue moving forward? And also, what do you think about Bitcoin and its implications?
I think the rising price for gold and Bitcoin is actually linked to a certain extent because it's a result of the uncertainties of money and the dollar. So for gold, for example, we'll start with gold. As I mentioned earlier, there's an anticipated interest rate cuts coming from the US Federal Reserve, which has actually weakened the dollar globally, which makes gold more attractive to investors. And I think this economic uncertainty over the last year, which is, I think gold is, I might be wrong with this number, is 37% up year on this year. I think that the economic uncertainty is a massive result. The increase in gold price is a massive result of this economic uncertainty. So I think for the short term, I think gold prices will remain to stay where it is, or even go further up if these uncertainties persist, especially with the tariffs that we were talking about earlier, and if they get cancelled, or if Trump pushes through. And in the long term, I don't see this trend continue, as the US dollar will likely strengthen again, and then gold becomes a less attractive commodity to purchase. But I think, definitely in the next couple months, next year, where interest rates are predicted to go from around 4.25% down to 3.25% in the US, that gold, it will be a very attractive investment opportunity. And I think with Bitcoin, Bitcoin's had massive growth in the last few years especially, but even before, going back 10 years, it's from what its price was 10 years ago, it's like 10 times greater than it is now. Now it's 10 times greater than what it was 10 years ago. And I think with Bitcoin, obviously very different from gold in the sense that Bitcoin is scarce. There's a finite amount of Bitcoins in the world. So then once again, I think with the economic uncertainty, investors are looking away from traditional financial systems, such as money and currencies, to more decentralized assets like Bitcoin. I think actually recently with Bitcoins, there's been about $12.7 billion worth of Bitcoin offloaded in the last month, which creates a lot of pressure. So in the short term, I think Bitcoin can experience a lot of volatility. But similarly with gold, if there's still growing economic uncertainties, and if Bitcoin remains to be the attractive option that it is currently, I do believe that Bitcoin will continue rising in price. But as I said, it'll be all down to the economic uncertainty and what happens with the Fed interest cuts in the next, not just this month, but in the next year, and what happens to the global markets.
I was actually listening to a podcast yesterday, and it's the Amplify Me podcast with Anthony Chung. And Anthony is someone I've got to know. Actually, I don't know him that well. I've met him twice. I had one call with him, and I met him at Eton, and I've listened to his podcast quite a few times. And I think he will end up coming on Personable, hopefully within the next few months. But actually, something that he was talking about on his podcast yesterday, in his Market Watch podcast, was why gold has gone up such a significant amount over the years. And he was essentially saying that over the years, as gold has sort of appreciated, gold has, throughout history been sort of seen as a hedge. Obviously, originally, when the US dollar was tied to gold, they were, correlated. But then as the US dollar moved away from gold, gold was seen more of a hedge away from more traditional investments. And in terms of returns, it was usually typically a lot lower, but particularly since COVID, with inflation, massively impacting the real value of money, gold has absolutely shot up to the point of being one of those sort of meme stocks in terms of just how incredible gold has done. But what they were saying, which I thought was fascinating, was that the real price of gold and where that level should be, that's kind of been thrown out the window. Because if you're a big multi-manager, a hedge fund, you're an institutional investor, and you have billions invested, and 99% of that is in stocks, it doesn't really matter what price it's at, you still probably want 1 or 2% in gold just as a hedge. And so that could be used as a mechanism to explain why gold has been reaching such high levels. And it's not as simple as to say, oh yeah, gold's 6x what it used to be 5 years ago, it's going to go down. But actually, no, gold is at this new level. There's a lot more money, as we were talking about earlier in the podcast. Asset prices are so high relative to the real value of money, and so gold is being used as a hedge, and that doesn't matter what price it's at. It's like some hedge fund managers a stock can do extraordinarily well, but they might only have 20 stocks in their portfolio. And so if one stock appreciates so much that it gets to more than 5% of the total value of their book, they will actually have to sell it. And it's the same thing with gold, is that even though it is, everyone knows, or a lot of people think that it's incredibly overpriced, it still makes sense to have it within the book. Stephen Roberts on my Markets podcast last week, and they were actually saying the same thing on the Amplify Me podcast in terms of what to invest in, is that now the gold prices are so high, it's actually the gold operators and gold miners who are potentially going to see a lot of alpha coming forward. So I'm in Australia, in Sydney with you at the moment, and I was on holiday with my family a month or two ago in Australia, and we paid a visit to a gold mine that had been closed for like 60 years or something. And they knew that there was still gold under the surface, but they were basically explaining that the price of the gold has an implication on whether to reopen a mine. Because if the gold price is extraordinarily high, all the costs associated with hiring workers, buying machinery, getting the gold out of the ground are worth it, because the gold, is going to be worth a lot of money when they actually get it out and sell it. And so the very fact that a lot of gold mines are starting to reopen and to resume production throughout the world, it shows two things. One, it shows that the gold mines are opening and going to produce and increase the supply of gold. But it's also showing that the gold mines, and so potentially they're good companies to invest in because they'll be selling more gold. But it also shows that if these gold mines, which might take 3 to 5 years or 10 years to actually get their gold out, it's showing that they think that this increasing gold price isn't just a myopic short-term thing, but it's actually something that will last moving forward. And I just wanted to quickly link to the idea of Bitcoin as well. I similarly think Bitcoin has been pretty crazy over the past few years, similarly taking the place of gold in terms of being a more stable investment compared to equities and lots of other things. Ironically, Bitcoin has often been seen as a way to get away from fiat currency and away from currency that's being linked to the governments. But Donald Trump has actually been a big proponent for driving Bitcoin forward, both in his election campaign and now as President of the United States. And both of his sons, or one of his sons at least, Eric Trump, is heavily involved in cryptocurrencies. Trump actually launched his own cryptocurrency at the start of his election, same with Melania Trump, with Trump's reaching like $4 billion in value, and Melania Trump's reaching, I think, around $200 million in value. Eric Trump, his son, has actually just become a billionaire off the back of his cryptocurrency doing well. And so it's this very weird relationship in which if the government doesn't do as well, Bitcoin's likely to do better, but it's actually the government who are supporting Bitcoin being a thing. I've always been pretty skeptical of Bitcoin, never really invested in myself. Perhaps looking back over the years, this was a stupid mistake on my part. But I'm curious as to whether it remains Bitcoin to do well, stable coins to do well, or something else that's as more regulation gets involved in the means of Bitcoin and cryptocurrency, what changes there. I want to ask you one last topic, which is pretty relevant to this week, in which the Department of Defense was renamed the Department of War by Donald Trump. There's obviously a lot of major conflicts going on in the world right now with Israel and Palestine. We've got Russia and Ukraine and lots of other conflicts that are going around the world. Alongside that, through negotiations with the US, Europe has raised their defense spending in order to reach, they're aiming for 3% GDP by 2030, which I think is a goal of about $800 billion over the next 4 years. Do you think that the simple renaming of the Department of Defense to the Department of War has any real world implications? Stocks like Palantir have done very well over the last few years. What do you think the role of war is going to have on the economy right now and in the years to come?
Yeah, so obviously very topical, just happened this week. I think it's quite, I think it will have implications on the economy. Department of War sounds a lot more aggressive in its nature compared to the Department of Defense. And while I do not know anything about America's future war plans, it almost sounds like they will wage more war, just from an outside perspective. So economically, I think it could have implications on arms and maybe automobile manufacturers who manufacture parts for the army and for war-related goods. Obviously, war is not great for economies across the world, as it can, put strains on certain products such as Ukraine, gas and wheat, for example. So no one wants to see more war in the world, of course, but I think it will be interesting to see what happens to the stock prices of those companies in the US who have partnerships with the Army, Navy, and all the different branches of the US Army, and see how that reaction has changed and what will occur in the future if America decides to commit troops to certain wars or certain campaigns across the world.
Ironically, just to give you a little example and then come back to the point, it's like with the stock market, when a stock is doing really well and has gone up by 10% or 15%, a lot of investors are like, oh, it's done well, so it's going to do well moving forward. But that's actually the point where it should bounce back to get more bounce back to the price that should be. And similarly, when a stock has gone down 10 or 15%, that's when someone should buy instead of selling more, because it's more likely to mean reversion back to the curve. But what I think is why I brought up that example is it's similar to the idea of war being used as a deterrent. In actually, when a lot of the countries around the world did get their own nuclear arms, it has incentivized countries to not get involved in war with each other as much, like Russia with the UK, with the US, with China, with North Korea, because for a nuclear bomb to go off, it would be so catastrophic that nothing's gonna, no one wants to have that implication. And so simply changing the Department of Defense to the Department of War, it might make people feel like, oh, something bad's really gonna happen. But actually at the same time, it means that the US is very serious about its defense. It's serious about what it can do on account of being threatened. And it shows that they do have the military capabilities, which in terms of like big dogging other countries will hopefully make them less incentivized to actually get into a war with the US than otherwise. And last little point that I wanted to go on is something that I've noticed reading an article today from the Wall Street Journal is just how well the stock market has done recently. And so it's saying that the average US mutual fund or exchange traded fund posted a total return, US fund, posted a return of 2.9% in August. And many different funds, are up a huge amount over the past year. September has often been seen as, point reference to the last week's markets podcast. September is often seen as more of a dry month for markets, but with the markets doing so well and the asset price inflation we were talking about before, there's a potential run-on for a continued success of asset prices. During this podcast, we've talked about the tariffs, we talked a little bit about the Fed, we've talked about Europe, we've talked about UK gilts and the impact of the wider region, the UK, and what they could be doing. We've talked about gold, Bitcoin, the Department of War, and lots of other topics. In terms of just noticing what the press is talking about, a lot of topics are pretty repeated. So we've kind of touched on everything we can, but it doesn't seem like there's too many life-changing, world-changing things going on at the moment. But anyway, Luke, have you got anything more to add this week, or any more takeaways?
Oh no, just thank you for having me. Really enjoyed it.
Yeah, thank you very much, Luke. Absolute legend. I really appreciate you filling in for any hedge fund guests that come on. And I feel like anyone listening, including myself, may have enjoyed this even more than listening to the people they always listen to. So thank you so much, Luke. Absolute pleasure.
Thank you very
to everyone
much.
listening, have a great week. I hope you took a lot away from this. And we'll see you next Monday, or see you tomorrow if you tune in for the next personal episode.